Hello everybody, it's been a while. It's Monday, January 18th. We're wrapping up a wonderful holiday, Martin Luther King Day, and I'm getting myself ready for this week's trading, and I've been looking at the markets, and I wanted to bring you along. I've had many requests for the videos, and I apologize for my absence. We'll be a lot more regular going forward in 2010. I'm looking at a chart of the E-mini S&Ps. I'm currently on a weekly time frame, and I'm on a time frame such that I can see the all-time high from the market and the recent low. And the market's been making a nice move up, and the interesting thing is that we are at about a 50% retracement off of those highs. So the market's made it 50% back up from the bottom, and this is a pretty strong technical zone. The next zone above that, 61.8, and that's going to coincide with the old support resistance neighborhood. And I didn't draw that spot on yet, but you can see that this ballpark will coincide a bit. And so if the market does choose to power on up through, we're going to be watching 1240, call it 1250 just for a fat number, and that'll be a place of interest for us. We are currently trading at a place of interest because it's 50% off of the entire market drop, and it is 61.8% off of the third wave of wave count here. And I'm a bit of an Elliott wave theorist, so let me give you my quick take. This is the first macro wave down, second move up, third macro wave down, which is made of three distinct wave sets. So all that's a macro wave 3, and we're currently in a corrective wave 4. In wave theory, it should not trade up into wave 1, which would mean that it shouldn't trade up around 1300. The market shouldn't exceed 1300 and maintain a valid wave count. It's not saying that it can't. We can't predict the future, but in my opinion, I think the market's due for a correction. With a bit of a disclaimer here, I've been thinking the market's been due for a correction since, say, June of last year. So I've been a little bit bearish on this market, and it's clearly been pushing up. And let's go ahead and take this down into a daily time frame. Let's get a good look at these candles. And Friday we had a big bearish day, nice strong bearish candlestick, and it traded right down into the old resistance support zone and right into the trend zone. I didn't draw that trend zone very well, but we're right here in that neighborhood. Now, in this ballpark, we see that the market is rallied back up. Now, that white candle is Sunday and Monday's futures trading sessions combined. The stock market wasn't open on Monday because of the holiday, but we are seeing a bit of an upward move. Now, I'm going to bring up another chart of the futures. This is the actual look at the market right now. And this is, well, it's 15 minutes delayed, but this is a 15-minute time frame, and we can see the rally up, which, just to be clear, what we're talking about is Sunday afternoon, evening, Monday, and we're starting to see it round out and take out support a little bit. It is trading higher than the candlestick low. So if we go back and look at that daily chart, what we're talking about is the drop down to that old support resistance zone and the rally up. I'll bring that chart back up one more time, and I'll squeeze it in a bit. And you'll see that support zone right in here. And this is the rally up. Now, what does this tell me? Well, the market's going to open slightly higher than it did yesterday at this point in time, unless it continues to trade down and overnight futures trading. We'll get a better look at it in the morning before the market opens, before that opening bell. And from this point in time, I'm not sure what to expect out of the market. We could see some more up. We could see it start to power on up through and give another bullish leg up. We could see a failure of support, and if these support zones fail, well, we'd watch that next support resistance zone back here like a hawk and watch for the market to drop down to this neighborhood and maybe rally up. If the market starts to take out support, that is a signal of a change in trend. And so let me clarify this for you and kind of warn you what we'd be watching out for. And I'm going to grab a little drawing. Okay, now I've got a little drawing tool here. And again, possible outcomes from the market could be a corrective move up, a few candles up, nice strong move. If this support zone fails, we're going to watch that next support zone to see if it holds, and that's the old ceiling resistance support zone. And if we get a bounce up off of that, it becomes critical what happens next. Because if the support zone, if the rally fails and the support zone fails again, we have a reversal. And what you'd see here is a head and shoulders reversal pattern. Before we can have a market moving down, we would need to see failures of support. And in the case that we start to see failures of support, it'd be wise to start to close out and capture profits on the bullish positions. Make sure that you don't let the market get away from you, and potentially start to put on some bearish speculative positions. Low risk, open-ended risk graphs to the downside, because if the market were to melt down, it could be a spectacular meltdown. Let me take and get rid of the drawing tool again. And I'm going to take you in and make you look at the VIX. $VIX. This is the volatility index. And there's an old saying that when the VIX is low, it's time to go. And let me take that from daily to weekly and just show you that the VIX is relatively low. It's seen lower days, but that was during some of that market heyday. So here, compared to its recent history, the VIX is low, and a really good little test for the VIX is to add Bollinger Bands on it, and just a standard deviation of 2. And you watch for it to poke out the bottom of the bands. So if it pokes out the top, it's high. If it pokes out the bottom, it's low. And I'll take that to daily. And what we'll see is it just violated the bottom of the band. And that is where the pivot formed on the S&P. We can see the resistance pivot formed. So the VIX is low, and that essentially means that the market's relatively complacent. So in the weeks to come, it'll be interesting to watch to see whether or not the market takes out support or resistance. And if it does, I would suggest you trade accordingly. If it's taking out resistance, you got to be bullish. And if it starts taking out support, you should be putting yourself into bearish positions and closing out the bullish positions. Otherwise, good luck, good trading. We'll do another one of these next week, and we'll see what we came up with. Thanks.